And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the show. My name is Al Gordon, and as always, I'm working on your financial freedom. And on today's show, we're going to break out the crystal ball. It's another future forecast type of show. I've got the crystal ball. It is fresh out of the shop. It looks good. The guy at the shop even shined my crystal ball, so it's even shinier than it normally is. I mean, this thing has got to work, right? Oh, you've listened to past shows, and I've broken out the crystal ball, and I've told you information, and the information either panned out or didn't pan out. So you're sitting there going, I don't know if I could trust this. That's what predictive analysis is. It is the intentional act of trying to figure out what's going to happen in the future. Yeah, good luck with that, right? I mean, let's put it mildly. If we could figure out what's going to happen in the future, we would just go and buy a lottery ticket, right? Well, not just any lottery ticket. We would actually go and buy the winning lottery ticket, right? Because we would know what the numbers are for the lottery. So all we do is we just saunter down to the store, buy that lottery ticket, put our numbers down that we know are going to win, and then poof, we win, right? How often does that happen? Okay, it does happen occasionally to lottery winners, but I don't think the lottery winners have crystal balls. But I do have a crystal ball. I have a crystal ball that I call research. Yeah, research. Not racehorses, but research. Yeah, I know. I was going for a joke there. It didn't pan out, so we're just going to talk about the crystal ball really being research. And really, at the end of the day, one of the things that you must do as a real estate investor is you have to wrap your head around the research. You have to wrap your head around the markets. You have to understand the real estate market that you're about to enter and potentially stay in for a period of time. Real estate investing, in case you didn't know it, is a long-term hold strategy. It is a long-term hold strategy. When you buy an asset, and if you're a Lifestyles Unlimited member, you know this emphatically. When you buy an asset, you buy that asset with the intention to hold it for a year and a day. Now, why do you do that? What's the point of holding it for a year and a day? Because at that point in time, your asset moves from qualifying as a short-term capital gain asset to a long-term capital gain asset. Why do we care about that? The reason we care about that is because the taxing structure between those two types of tax structures are radically different. They're radically different. If you are in the short-term capital gains lane for real estate, you will pay taxes on the gain of your sale based on ordinary tax rates, and the IRS, depending on what you're doing to make that gain, the IRS may declare that you are self-employed and impose an additional 15.3% tax on top of that. What's that 15.3% tax? That's self-employment tax. That is Social Security and Medicare. The government thinks that you are operating without a job and that you need to have security in your future, so they impose that 15.3% tax on you. Now, some people would say it's not really a tax, Al. It's not a tax because it is an investment in your future. Now, when you use the word investment in correlation with the Social Security taxes that are taken out of my income streams, I could do much better. So what am I getting at? What I'm getting at is that long-term capital gains rates are the more effective capital gains rates. Those capital gains rates are currently structured much more favorably than short-term capital gains rates. So when you buy an asset, a real estate asset, you need to have the intention to hold that asset for a year and a day. Now, many Lifestyles Unlimited members, they hold their assets for at least a year and a day. Some of them hold the assets for 2 years. Some of them hold the asset for 3 years. Some of them hold the asset for a longer period of time. Why do they do that? Because the asset is producing an income stream for them. The asset is doing what the asset is supposed to do. So there's no reason to get rid of the asset because the asset's performing. Now, you may get to a point in future you where it's time to dispose of the asset. Maybe you decide, okay, I've effectively doubled my money in this asset, so it's time to harvest my gains. So what I'll do now is I will sell the asset, I will take the money that comes from that asset, and then I'll turn around and I will buy 2 assets to replace that original asset. That's how we do it as real estate investors. Now, I've hit you with a lot of information. I've kind of hit you with a fire hose of all kinds of different real estate investing information. Some of it may have stuck, some of it may have slid off of you. Don't worry about it. At the end of the day, what we're going to talk about is we're going to talk about predictive analysis. And I have 2 of my favorite friends on today's show. I have Forbes and I have U.S. News and World Reports. You thought I had a guest, right? Okay, well, technically I have a guest. I have 2 financial newspapers that have written columns about the future of the housing market. And Forbes Advisor says the housing market might finally be entering a transitional phase. So the question you have to ask yourself is transitional phase. Transitioning from what to what? What's going on in the housing market? The next line of the article goes on to say that summer sales have been tepid thus far. Tepid. What does that mean, tepid? What that means is it's not aggressive. It's not going at a rate that you would want to see as a real estate investor. It's kind of slow. It's kind of going slow. So what does that mean? It means that this article is talking about people that own their own homes or are looking for a home to purchase. The market in its present state is reflective of what people that want to buy housing to live in are experiencing. Now, we as real estate investors, we experience the same thing, but we don't drive the market per se. The people that drive the market are the people that want to buy a house to live in and the people that are living in a house that want to sell a house. Did you know that? Yeah, go do your own research and you will find that the majority of homes in the United States of America are owned by owner-occupants. The rest are owned by somebody else. What's somebody else? Us, real estate investors. Okay, at the end of the day, could real estate investors actually drive the market? I suppose we could, but we don't necessarily do that. We're not the big market mover in the industry. The market mover in the industry are the general public. The general public, of which, by the way, I am technically one of those people. I own a house that I live in. I also don't own a house that I don't live in. What do I mean by that? It means that I have sold off all of my single-family assets, and I did it for a very specific reason. The assets achieved what they were supposed to achieve as an investment tool, and my business rules said, it's time to go out, it's time to go. And then as I was selling my last single-family asset, this line from Forbes Advisors became very real to me. Summer sales have been tepid thus far. I was selling an asset in a buyer's market. It's difficult to sell an asset in a buyer's market. And here's why. Buyers have a lot to choose from, and buyers don't have a lot of competition. And why is that going on in the marketplace? Well, here's my opinion as to why it's going on in the marketplace. Let's go back a couple of years. Let's go back and look at what was going on in 2020, 2021, 2022. What was the real estate market doing? The real estate market was in a seller's market. Prices were going up. Sellers were commanding the market. Interest rates were relatively low. You could get a mortgage for a property that you're going to live in that would be less than 3%. Why do I know that that was possible? Because I own one of those mortgages. I have a mortgage on my principal residence. I think it's like 2.85% or something ridiculous like that. It's a really great mortgage rate. As a result of that great mortgage rate, I don't think Tina and I are ever going to move out of this house because I can't get money as cheap as I got money a couple of years ago. And there's the rub. Interest rates for mortgages literally doubled overnight. When there was a change in the presidency, yeah, I'm going back a couple of years, but when there was a change in the presidency, what occurred was the current president changed economic policy. He did. He changed his economic policy. He changed the policy from the previous guy to his own policy. Does he have the right to do that? He's the president. Absolutely, he's got the right to do that. He 100% has has the right to do that. Is it the right policy for America? Well, that's one of those things you got to question. Is it the right policy for America? Well, at the end of the day, you and I, we could question it, but we can't change it, can we? The economic policies that the current administration put into place caused interest rates to change. There was something that the president did that caused interest rates to go up, and they started going up pretty quickly. Remember that? You do remember that, right? So you think about it. Somebody a couple of years ago who was looking to buy an asset to live in, they were qualified for maybe, let's say $250,000. And they're in a part of the country where they could buy an asset for $250,000. It would be a nice place to live in. So they're looking around, they're looking at all the different assets, and they're going, wow, we could buy new, we could buy used, we could buy anything we want because we have purchasing power. We're qualified for up to $250,000. And then the interest rates went up. And what happened to their qualification? Their qualification rate went down. No longer were they qualified for a $250,000 house. Now they're only qualified for maybe a $210,000 house. But keep in mind, the houses they've been looking at are in that $250,000 price range. That's where they've set their mind as to the type of house they want to buy. But because the interest rates adjust and their buying power went down, their dreams for home ownership were taken away from them. Now, maybe these people were first-time home buyers. In other words, they're currently renters and they were looking to buy their first house to live in. Their dreams, well, they kind of got dashed. They got dashed. What about people that are looking to trade up or trade down? Well, they're kind of stuck because if they sell the asset that they have right now that they're living in, the problem is, can they afford to buy the replacement asset? And the replacement asset, will it be as nice and as good as the one you just got rid of? Because now you're effectively paying more for a property. So the housing market kind of got turned on its side. But who benefited from that? The real estate investor. The real estate investor benefited from a market that was literally turned on its side because as buyers for assets that they will live in diminished, the amount of real estate investors that are out there did not. As a matter of fact, real estate investors realized that in this buyer's market, it's actually a good time to buy. Now, prices are going up. Prices have not fallen. In spite of all of the predictions over the past year or two that real estate prices were going to fall, real estate prices were going to crash, that we were in a real estate housing bubble. It didn't happen, did it? So how's that crystal ball working out for you now? All right, when we come back from the break, I'm going to blow your mind some more. Stick around.
Lifestyles Unlimited's Real Estate Investor Radio Show returns in a moment. Got questions? Go to lifestylesunlimited.com.
How would a few $100s of passive income monthly change your life? Cover a car payment, a living expense, add a few more streams, and when all your expenses are covered, you're retired. What if you could do so in 5 years or less? Lifestyles Unlimited can show you how by investing in real estate, just like Lifestyles Unlimited member Lisa.
So we started passively. It was on vacation is when we realized we really need to take the plunge and be more active in this. Just because I'm an educator, I wanted to really know what I was doing. So it was just education on my part is really big. And I'm like, well, I could do that.
Learn how, learn now with Lifestyles Unlimited. Text the word radio to 88007. That's radio to 88007. And join for just $297. That's a $443 saving off the regular price of our Financial Freedom Program. That's 60% off the regular price. Lifestyles Unlimited. Text radio to 88007. Take action today and get educated with Lifestyles Unlimited. Text radio to 88007.
Creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the second half of the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and as always, I'm working on your financial freedom. And I'm doing so today by forcing you to think. I'm forcing you to think about what the housing market is currently doing. Now, we can get some help. We certainly can get some help. We can do some research, and we can find some folks out there that actually have a clue that are writing information that is useful for us. However, some of the information that's out there is not useful for us. Does that make sense? Now, I'm not going to share with you useless information. I'm not going to share any of that with you because I find that to be just futile. I really do. I find that to be an exercise in futility. What I want to do is share with you information that's going to get you thinking and, more importantly, making sure that you don't have to rely on a crystal ball. I want you thinking about what the real estate markets are currently doing. I want you to understand what they have done in the past. Now, one of those things that they teach you when you invest in stocks, you know what I'm talking about. I'm going to switch gears on you here right now. One of the things that they teach you when you're investing in stocks is that future performance is not indicative of what happened in the past, right? They always tell you that, right? Guess what? It's the same for real estate. It's exactly the same for real estate. I don't have any idea of what the real estate markets are going to do in the year 2029. I don't. I really don't. I don't know. We could be coming out of a major recession in 2029, or we could be coming out of economic nirvana in 2029. We could be in a situation where real estate markets collapse and prices are at the bottom that they've been in years, or we could be at the top of the market. Prices have never been so high, or we could be somewhere right in between. I don't know what's going to happen in 2029, but you know who thinks they know? U.S. News and World Report. They said the next 5 years will be a challenging time for both home buyers and renters. Oh, why do they say that? What makes them think that in the next 5 years, the housing market is going to have some problems? Well, here's their key takeaways. They say home sales will remain constrained as long as mortgage rates stay over 6%, but are expected to rise, meaning the home sales, are expected to rise as mortgage rates and inflation decline. All right, let's stop for a minute. They're anticipating mortgage rates going down. We've kind of seen some evidence of that occurring, right? So there's been some change in the cost of money in the mortgage markets. It's a little cheaper to buy money, right? The other thing that they're saying is that they anticipate inflation declining. Have you been to the supermarket lately? Okay, now I know there's an official government inflation stat out there. And when they quote that stat, it seems like everything is going just hunky-dory. But one of the things, or actually two of the things that they don't include in that stat are two of the biggest expenses you have in your household. Food, i.e. groceries, and fuel. Yeah, fuel. Because fuel, whether you know it or not, costs you money everywhere. Everywhere fuel costs impact your cost of being a consumer. Because all of your goods have to be transported to you. We don't have that Star Trek, what do they call that thing? You know what I'm talking about, where they can beam from one place to another, a transporter. Yeah, we don't have one of those things yet, right? So the only way your stuff can get to you is it has to come on something that has some form of wheel. And in order to make that wheel turn, fuel, it's going to cost you money, right? And fuel costs have been up, have they not? Now, some of you are banking on the election. Some of you are banking on the fact that maybe the current administration will no longer be in power and that the former administration will come back into power. Does that automatically mean that if that happens, does it automatically mean that the economy is going to be wonderful again? No, it doesn't. It doesn't automatically mean that just because the guy who was the president before gets back into office doesn't mean he can replicate what happened while he was in office, because this is going to be another 4-year period of time where there's a lot of things that impact the economy. Does that make sense? And interest rates are just one of those things. So there's no guarantee that if we change administrations that things are going to be better. Sounds like I'm painting a big doom and gloom picture for you, right? All right, well, let's see what else U.S. News and World Report put out. They said home prices will mostly hold their value in the short term due to a lack of supply, but that could vary between markets due to local fundamentals. So what they're getting at is that in some markets there is new construction. New construction exists out there and it's competing with existing construction for market share. I saw a report on another channel, on another news feed that said something to the effect, I would give them credit, but I just don't remember who said it, something to the effect that new home sales or new home construction is creating double the inventory that it has done over the past 5 years. Yeah. So in other words, there's more new home construction available to potential buyers than there was previously, and that's impacting the resale markets. But what about you as a real estate investor? So far, what has any of this had to do with affecting your business plan? The answer should be, well, it's not affecting it at all. It's not affecting it at all. Why can I say that it's not affecting it at all? Because when I'm buying a real estate asset, I make my money when I buy the asset. Did you know that? You technically make the majority of your money when you buy the asset. And here's why. You've bought the asset and you've put it into service in a particular place in the market. You have used financial analysis to determine what you can afford to pay for the property, what you can afford to renovate the property for, what the property can provide to you in the form of rent, and that you have found a great resident to live in the property that understands that it is a business for profit, that you're providing clean, functional workforce housing to a demographic that is desperately looking for it. They found it, and you expect them to keep it the same. You also expect them to pay in a timely manner. And in exchange for doing that and taking care of the property, letting you know if something goes wrong, you will continue to provide them clean, functional workforce housing. And they will love living there. They will enjoy living there because that is a place that they call home. It is a cool scenario. And because you have plugged in all of your financials at the time that you bought the property, you can ride out what the market does. If home prices crash, what do you care? You just hold the property through the crash because home prices will come back. They have historically shown that. By the way, the stock market has crashed a lot more than the home market has. I mean, you do your own analysis on that, but that's my story, and I'm sticking to it. Mortgage rates will likely fall from 6 to 7% unless there is a recession. Unless there's a recession. But short-term lending rates will start gradually falling by late 2024. Okay, so what they're saying is they're seeing signs in the economy right now, signs that indicate that mortgage rates might be falling. They might be coming down. They might benefit the people that want to buy a home to live in. What about us as real estate investors? Doesn't that benefit us? Well, it does benefit us, but keep in mind, when we are doing our pricing analysis for the property that we're going to buy, we put the interest rate calculations into our formula. So by doing so, we've already calculated the cost of buying that money for that loan into the big equation. And that tells us whether we can afford to buy or not buy an asset. Does that make sense? So even if the mortgage rates go down a little bit or they go up a little bit, we are still going to price the property based on what the mortgage rates are at the time that we're looking to acquire the property, which goes back to my comment that we make our money when we buy the asset, not necessarily when we sell it. We realize our money when we sell it, but we make our money when we buy the asset. Pretty cool stuff, right? How's your head feeling? Does it feel like I'm just dancing around in your head? Because I kind of am, but I'm making you think. I'm making you think about things that nobody else will make you think about. That's why you tune into the show, right? Because you want to think and because you want to be an excellent real estate investor. And that's what we create at Lifestyles Unlimited. We create excellent real estate investors. Now, the fourth takeaway from U.S. News and World Report is the only takeaway of the four that they mentioned that actually has a benefit to the real estate investor. Okay, check it out. Rental growth should flatten out as more supply hits fast-growing markets, but will rise faster for single-family versus multifamily units. So what they're saying is that prices for rents are going to go up, and they're going to go up more for single-family assets than they do for the multifamily market itself. Now that is pretty interesting information to have, don't you think? It makes me wonder where did they get that information from? How is it that they can come up with that suggestion? Well, they have a crystal ball too, and they're doing predictive analysis also. Remember, they're in a medium where they sell sell information. So they are doing the best that they can to develop the information and present the information to people like you and I. Now, you and I, we have to take that information and we have to address it appropriately. We do. We have to address it appropriately. And that's kind of what we've been doing on today's show. I've been giving you information about the housing market. I have been providing information that I went out and found through my own research, and I'm sharing that information with you. I am not taking credit for the information. I am giving credit where credit is due. But at the end of the day, the information that's being provided is still information that is predictive in nature. You cannot guarantee that the prediction that they make is going to come true. I'm still waiting for the housing bubble to hit. Do you remember all the news, all the commentary 6 months ago or a year ago where they talked about the housing market is overinflated. The bubble is out there. The bubble is ready to burst. But where in any of the information that I provided you today indicates that any of these publications believe that the housing market's going to bust. Now, U.S. News and World Reports cautions that if we go into a recession, there might be some problems. So essentially what they're saying is if we go into recession, which could happen, it could happen in this country. We could go into recession. And they're saying if we go into recession, all bets are off. All our predictive analysis, forget about it, baby, because now we're dealing with a completely different scenario. So how does that affect the real estate assets that you have? It really doesn't, because you have your assets in place. Your assets are working for you. Your assets are producing cash flow, allowing you to capture equity, providing natural appreciation, giving you principal pay down, allowing you to take advantage of the most aggressive and favorable tax rules and laws in the tax code. I think it's beautiful. Kind of wonder why you don't do it. Now, I know why you're possibly not doing it. It's because you don't know how, which is why you tuned into this show. You want information. I'm cool with that. That's what this information show is all about. Information. I am here to give you information that nobody else will give you. But there is a one-stop shop that you can achieve that will give you all the information at once. It's called Lifestyles Unlimited. Yeah, Lifestyles Unlimited. Have you heard of it? Lifestyles Unlimited is a real estate investor education and mentoring company. Been around for 35 years, teaching people how to retire one 401k at a time. Yeah, we're not teaching you how to retire at the 401k. We're teaching you how to get rid of the 401k and how to buy real estate assets. We're teaching you how to get retired in 5 years or less, not 35, 40, 45 years like the current game plan that you're on. We're teaching you how to retire in 5 years or less. Think about that. U.S. News and World Reports is doing a housing market prediction for the next 5 years. What if you became a member of Lifestyles Unlimited right now? You just said, you know what? I've listened to the show enough. It's time. I gotta join the group. I gotta join my homies. I gotta be a part of what Lifestyles Unlimited is about. Because here's the other thing about Lifestyles Unlimited that you may not know about. It is a community of successful, like-minded individuals. We share information with each other. We talk to each other. We do everything that we can to help each other out. We offer mentoring services. If you feel you need mentoring services, it's available. And I'm here to tell you, you need to have a mentor. I'm not doing this real estate investing stuff by myself. It may seem like it. I mean, I get on the radio and I sound like, wow, that Al Gordon, he's got it all dialed in. Well, I do mostly have it dialed in, but here's the thing. I have mentors on speed dial. And the reason I have them on speed dial is because I know that I don't know the answer to every question. And when multiple minds go to work on a problem, you tend to get a better solution. So I use my mentors as sounding boards to give me information that I may not have thought about as I'm proceeding with my real estate investing. Pretty cool stuff, right? So Lifestyles Unlimited is available to you all across the nation. We were founded in Texas 35 years ago, but we are available to you all across the nation. Would it blow your mind if I told you we have international members? Well, we do. Yeah, when you become a member of Lifestyles Unlimited and you come to the expo, which we're going to have in the first weekend of October of 2024, when you come to expo, you might meet some of those international members. They're from places like Australia, New Zealand, Israel, Germany, England. I'm trying to remember all the places that I've met these people from. There's a lot of places. I think if I recall correctly, we have members in 13 different countries that are not the United States of America. That tells me that people all across this planet are trying to retire themselves. They're trying to find a better way. You know what? At Lifestyles Unlimited, we have that better way. We have the path that you need to follow. We have the roadmap to your success. And if you want to do what I'm doing, you want to do what the 50,000 members of Lifestyles Unlimited are doing, go to lifestylesunlimited.com, sign up for a free workshop, and let's get you going.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.